Well, let's speak with Larry Shover. He is Chief Investment Officer at SFG Alternatives. Larry, good to see you this afternoon for you. Tell us, what are you watching at this time, Larry?
You know, right now I'm just mesmerized by just the moves we've been seeing today. The stock market seems to be just shrugging off yesterday when it really tried so very hard to sell off and just couldn't do it. Commodity prices are spilling off as we see today. Gold losing almost half what it gained yesterday. Oil price, it's very fascinating. But, you know, at the end of the day, I think we're all waiting for that ECB meeting on Thursday.
Absolutely. What are you expecting to come from that ECB meeting? Of course, looking for sovereign QE. The likelihood of that happening at this meeting, what do you put it at? How do you rate it?
Oh, I think it's very small. I think it would be less than 10% that there be any kind of introduction to quantitative easing or asset purchases. I definitely could be wrong. I've been wrong many times before, but I think it's more about just what Draghi can do to say that, you know, if we go as planned to meet that inflation target as quickly as possible, to kind of stifle out what Weidman and other people are saying and just give people the idea that, yes, we are going to have asset purchases, not quite yet. We want to see how the LSAP is working out and the bond covers are working at the present moment.
Yeah, but isn't that just cover talk, I guess, for trying to get more of those ECB members, Germany in particular, on board with the eventuality of full-on QE?
Yeah, no, and that's a great point. Sure, I'm sure that Draghi wants more people on board. It's a very diverse group with people on both sides of the aisle. But I do think underneath it all, they're waiting to see how the most recent action that we've seen over the 6 months, they're waiting to see what the effects of that will be before they roll out anything new. And keep in mind, it's just very, very different than rolling it out in, you know, America or Japan. I mean, we're dealing with a lot of countries with a lot of different policies. Yeah.
Absolutely. Let's go back to the United States. We had a number of Fed speakers throughout the day, Fisher and Dudley in particular. Yellen was speaking, but she didn't make any comments directly on the economy. So how is this Fed speak, I should say, shaping up this week?
Yeah, you know, I think it just calmed everybody's nerves because the news headlines yesterday were promoting the fact that, hey, perhaps tightening is not going to occur until fourth quarter of 2015. Some were even talking about first quarter of 2016. And I think when you sift through what the Fed was saying today, that, yeah, they definitely are on target for June of 2015. Exactly what the Fed funds behind me are pricing in and have been pricing in all along. So I think it just calmed everybody's nerves. And you can see the stock market very comfortable with that and continues to ratchet higher.
Yeah, and of course, this is a big week for economic data, that important economic data that's feeding into those decisions being made by the U.S. Fed. And of course, we get the dot points, those so-called dot points, when they have their meeting this month. So what are you expecting when it comes to that ADP report, firstly, that we get tonight, and then feeding into that all-important non-farm payroll data on Friday?
Well, first of all, I just have to say, from an American point of view, that the ADP data, not many people really look at it. It's been so distorted and skewed. I think people look for Friday's number. Yeah, I'm sorry. That's the way it seems to play out. And actually, there's been a lot less drama with the whole BLS number. There's this range of acceptability. Right now, consensus is looking at 5.7 and 228,000 ads. And if we're within reason of that number, I don't think the market will care, realizing that the Fed's still going to be on track for raising rates in the middle of next year.
Okay. Also in the U.S., we have House Speaker John Boehner presenting a two-step plan to Republicans that will see the Republicans being able to oppose Obama's immigration bill, but also avoid a government shutdown. So is that sort of, I guess, rhetoric at least coming from the Republican camp doing anything to sort of calm any fears that perhaps we could see that real, you know, live butting of heads in Washington?
Yeah, you know, I think it's the same thing as the threat of government shutdown last year, which seemed a lot more real. And, you know, headlines, we were all so worried about it, but yet asset classes didn't seem to be worried at all and just kind of shrugged their shoulders. So when I look at, like, volatility in the 10-year note, foreign currency, the stock market, it just seems like the only people that care are perhaps you and me, and market doesn't seem to be worried, figuring it will all just be status quo, as unsightly and sad as that may be.
Yeah, so the trends haven't changed as far as this market goes. You still do expect this sort of slow grind higher, nothing on the horizon that we can see, at least right now, that's going to shift thinking when it comes to investing decisions, really.
No, I mean, except for the fact that the market's just been built on sentiment all year, as opposed to last year in 13 when the market rallied before the data said so. Now it's a lot more sentiment driven. Keep in mind, like last month, 28% of the rally was Apple, Intel, Cisco, Walmart, Amazon. It's not really that broad. And in my mind, the stock market is getting very expensive. People are assuming $130 for the S&P 500. That would take us to 16 times earnings. I think it's too expensive. And in my mind, whether the stock market does well or not next year, I would reduce that and place it somewhere else.
But even if we talk about the stock market doing well next year, we're not talking the kind of double-digit returns that we've seen over the past couple of years. I mean, how could we?
Yeah, I mean, I guess we could say that at the end of 2012 as well, when we had that huge rally and no one saw it coming, right? And I'm the biggest offender of that. But you're right. I mean, I think people will be very satisfied with upper single-digit returns next year in the U.S. But the problem is that we're going to hopefully have some wage growth that should take away from earnings per share, revenue. So in my mind, I don't think the value is there anymore. I'd rather buy dollars, buy Japanese stocks, and buy European stocks in that order.